Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Tuesday, November the 3rd. Well, another very small green-bodied candle today, and an even smaller green-bodied candle today, which doesn't make us very enthusiastic about this market retracing substantially into this first time frame downtrend that the market and second time frame downtrend that the market's been in over the last few weeks. It's a very small green-bodied candle which has closed up near the high. So the small green-bodied candle tells us that the buyers have made some net bullish gain on the day, which is a positive. And with the market closing up near the high, it tells us that the bulls have made a good solid close with this market today, where they've closed the market in control, and they've shown some commitment to the upside. The only problem is, though, we haven't had a change of trend. Excuse me, and we actually still have a downtrend in place. And the current candle in bar chart terms is an inside day, or an inside bar, which raises doubt about the first time frame downtrend, but still no confirmation of a first time frame uptrend. And confirmation would be a bar with a higher high and a higher low, or a candle with a higher high and a higher low. So we need to really take out the high of the of the current day now, but also the high of the previous day, where we had the downside price rejection when the market tried to trade up above the cloud or the Kumo. Now, obviously, the top of the cloud here is now providing some sort of resistance for this market. And flat Kumo tends to be a false breakout. We saw that the market the previous day tried to trade up above and failed to close up above there. Today the market's traded up to the cloud, didn't trade above the cloud though this time, but still closed up towards the high. So a mixture of positive and negative news for today. The small-bodied candle actually means that the bulls have really made only a small amount of progress, and what you'd like to see is for them to start to make a little bit more and more progress as the market was beginning to trade up with a higher close than the previous close, but it failed to do that, so that raises some doubt. So we need to keep an eye on the top of the cloud or the Kumo for a solid bullish close up above there. If that happens, then the high of the previous candle is very important, as we've said, which is at around 1,050. And then we've got the flat Kijun-sen, which tends to be an attractor of price action. So that's at around 1,060, and the market may find potential resistance if the market does trade up to around there. Also, that's roughly in the same region as the Tenkan-sen, the green line, which represents the faster trend. And the flat Kijun-sen is telling us that the market is basically in equilibrium. Now, with the market trading within the cloud, we basically have a neutral market. If the market's trading up above the cloud, it means that the market has a positive bias. If it's trading below the cloud, we have a negative bias. But trading within the cloud, the market has a neutral bias. So we need to be a little bit wary of taking any long trades. We can still take long trades, but we perhaps might lighten our the size of our positions a little, as compared to if the market is trading up above the cloud. We probably feel more confident of long trades if the market's trading up above the cloud. Not as confident if the market's trading within the cloud, and certainly not too confident if the market's trading down below the cloud. So keep an eye on the areas that we've said for the next day or so. We do have the wicks on the bottom of the candles, which is another positive sign, and that represents upside price rejection, and it represents the buyers coming into the market. So it happened today where the buyers came in when the market tried to trade down to 1,030. The previous day, roughly about the same area, 1,029, when the market tried to trade down there, and a small amount of upside price rejection the previous day. So there is some buying support coming in down around these levels. So we really do need to keep an eye on that low there at 1,029, or roughly about 1,030, which is the swing low potentially, and look for that to be taken out for further downside if the market does does come off.